this webinar. All right, guys, this webinar is now being recorded. All right. All right, so divergence is one thing, one key essential things, and you just have to learn how to look for it. All right. It's just going to lag on your, it's going to lag. Hold on. I'm not sharing my screen. Give me a second, guys. This is something that I break down more during one-on-ones, and is divergence. All right. You can see divergence I was just showing you guys was a hidden divergence, which pretty much is going with the trend. All right. See the price.
Whoever's gaming, mute their mic.
Now what?
If somebody's gaming, can they mute their mic? It's like as loud as you are, man.
All right, give me. I think I should have muted everybody there. Is that better? Yeah, this is okay, cool. So the divergence, right? The indicator that you're using, like the stochastic or the RSI, is going to lag. And the price is going to do the opposite. So, for example, all right, so example, price is down here, all right, indicators up here. Price is up there, indicators down there. All right, this is indicating you that it's going to go up, all right? And check this off. Look how many pips it went up. Let's say you would have caught it right here. It went up 80 pips. All you really need per day is about 40, 50 pips a day, right? And like understand something, trading is all, it's all mental, like it's all emotional. Like if you're gonna go back and revenge trade, you're gonna lose. If you have to have patience with this. Like people, like you can't let the market, get to you. You have to take your time and wait for setups. Wait for it is right for you to get in. Sorry, guys. Just wait for the right moment to get in. It's all about waiting for the right. It's all about timing. It's not, you cannot rush to get into market. Anytime you rush or you want to rush to make money, you're going to lose money because you're gonna want to. You're gonna have that gambling mentality instead of using your skill set. You're gonna want to gamble, try to make money quick. You're gonna lose it, and then you're gonna blame what? The only person you can blame is yourself for getting emotional, getting greedy, wanting too much at once. Right? If your account can't handle it, right? All trading is all about risk management. It's all about out of 10 trades, can you win 8 and not blow your account? Those 2 trades you lose. Meaning that I'll put it up here, annotate. Okay, so Meaning that if your account has $1,000, right, you're not gonna be putting in standard lots, right? Because you put it at 1.0, right, you're only good for 100 pips, right? That's all you're good for, right? Let's say I give out a trade and the stop loss is 50 pips, right? And you're using 0.20, right? Meaning that each trade is really simply calculated. It's $2 times 50, right? You're risking $100 per trade when you're doing that. So you're risking $100 per trade, right? So meaning that it'll take me 10 trades to blow my account, all right? Meaning that if I win 8 out of 10 trades using the same lots, I'm gonna be up pretty much $1,000. I mean, my fault, $800. I'm doing a 1-to-1 risk to reward ratio. All right. It's all about risk management. You guys want to do this. You guys want to do 3 trades, right? Because this is what I've seen it happen hundreds of times. 3 trades, use 0.10, 0.20. You guys get cocky. You guys think you guys know what it's doing. And what happens next, you use a 1.0, and that's the trade that you lose. And then you just pretty much down half your account. So now you minus 50% of your account. Instead of taking your time and pacing yourself at 0.20 or 0.25 or 0.10, just make sure your account is good for at least 10 trades. Because what's the point? What's the point if you guys are risking it all on one trade? Like, just go to the casino and play roulette and put it on red, if that's the case. If you guys want to risk it all, go to the casino. This is all about risk management. This is how you manage your risk. Make sure you guys, guys, if you guys want to bet huge lots, know how much, if you want to go all in on one trade, right? And you have $100 in your account and you want to use a standard, just know that 10 pips blows your account. It's all math, guys, and it's all about staying alive longer instead of trying to make money quick. You're not gonna make money fast in this. You're not. Once your account is built up, and I'm gonna be completely honest with you guys. Once your account is built up to 30,000, right? You can use 2 to 5 lots and be good. And you'll be good. It's just that you have to get to that point. Like, are you willing to stay disciplined? The market is only going to pay you to be disciplined. It's going to pay you a lot more once you have a lot more money in your account. Because if you have 2 lots, if you're using 2.0, right, that's $200. That's $20 a pip, right? You catch 20 pips, right? That's $400. That's $400, guys, on 20 pips. You see how simple trading is? Because I could put it a lot more simpler. Use a 5.0, right, and you catch 20 pips, you have $1,000. That's a 5 lots, right? If you break down trading, this is how you have to break it down, by pips and by your lot size. By breaking that down, that's how you're able to have risk management. If you don't have risk management, guys, I'm telling you, I've seen over and over again. I can win 100 trades in a row. I can win 100 trades in a row, and that one trade you decide to go all in, you just fucked yourself. Your account is gone. Now, what happens is you have to go through a whole recovery process, because now you're gonna get emotional. You're gonna have a lot of emotions, right? You're gonna get greedy, and you're gonna want to get revenge to get the money that you lost back. You know you took a big hit, so you're gonna get really, really careless because you're very angry because you lost your money. And I can bet you anything that you guys all have that same problem. I can bet you anything you guys want. You guys have that same problem. You guys want to risk it all on one trade. You guys lose it. Once you guys lose it, it's not the same because you want to make it back, and it's just gonna make you get greedy, make you get a lot more careless and care less about the. It's real money, guys. That's why I tell people, yo, use risk management. Like I understand if your account has $500, like, and you want to use a 0.20, just understand that 50 pips takes out $100, right? Because you're trading at $2 per pip. All right. Most of my trades has a 50 pip stop loss. Like that's how I like trading because I like keeping the risk small, the rewards bigger. And it's like if you're wrong by 50 pips, like yesterday I was wrong completely on that UJ. And it's not even because of me, it's because that's how the markets are gonna react around this time. Like I'm gonna let the markets do what they want. The next time I'm gonna get in a buy is probably if this has a divergence. So if this drops down here, right, and this stays up here, it's gonna do a divergence. If it drops lower than this, but it stays up here, like you guys can see the divergence for me, and then it's gonna go from here up. So this price has to drop. That's what I'm waiting for. Like I'm gonna get those 50 pips back for a fact. But I most likely won't trade. So look, see if the price is down, the indicator is up. You can see right there, boom. So regular divergence prices is gonna go up for a buy. So that's one thing. Like those are most key to being successful at trading. Risk management and just controlling your emotions, not letting your emotions get control of you. You let your emotions get control of you, you're going to lose money. When you give out a signal with 3 take profit, what does that mean? All right, perfect question. It's perfect. Good question. So when I give 3 take profits, right? This is how you guys should be taking the order. All right, let me clear this up. So I give 3 take profits, right? Three take profit, right? You got your entry, right? You got your stop loss, right? Once, change the background. Hold on, let me just change the background. So you got your entry, right? You got your stop loss, you got TP1, TP2, TP3, right? Once it hits your entry, you can get out. Like my goal is always to at least have 100% on TP1, right? If you're looking at your chart, you see it hit about to hit TP1, you want to stay till TP2. What you do is you move your stop loss to break even, and then you move TP1, the take profit, right, to TP take profit 2, right? That way, you're no matter what happens, you're gonna either break even or win a little bit on that trade, but you have a free trade because you're already in profit. Right? That's if you want to hold the trade, right? If you want to do this, if you want to put 3 different orders, right? And let's say your account is $1,000, right? And you're gonna use 0.20. you're gonna use 3 0.7, right? The total lot size. So total lot size you're using is 0.21, right? You can put each one at TP. You can put 3 different TPs there, right? But make sure that if you're doing this and it hits TP1 on the two orders that didn't hit the TP because you waiting to TP1, TP2, waiting for TP2, TP3, you have to make sure that you move your stop loss to break even, and then you let it rock. All right, it's all about risk management. Break even is, I'm not sure if you answered this, but why did UJ crash? The dollar lost strength because Christmas is over. The US lost a little strength. It's like less money is being spent. So I'm just waiting for the New Year's. Do not trade anymore, guys. Just study markup charts. Look at trades and see where you would have taken it. Just do that. Look at setups and don't take them. What you mean what I'm talking about in numbers? One technical analysis to master is support and resistance. Right. What did gold do? Wicks are very important. Wicks. All right, so if wicks are very important. Oh, okay. So, for example, I give an order on USDJPY, right? 117, like yesterday, right? Stop loss 116, 500. TP1, 117.20, 200, 117, 500, 118. All right. Leave that there. Let me open up a new box. So, once, what the heck? Hold on. Once order activates, right, and hits TP1, right? If you have 3 orders, so let's say you have 3 orders, 0.7, right? The first order should close on TP1. After that, you move stop loss to break even. So break even is 117, right? If your spread is 3 pips, right, you're gonna put it 11703. All right. You should know how to look up your spreads. If you don't know how to look up your spreads, you should study more.
¿Dónde?
Dime.
Pongo ahí el móvil y sale WhatsApp.
All right. So you move the stop loss to that, and that's break even. Then if you were able to TP2, right? You do the same thing. Once it hits TP2, right? You only have one trade left now. So now you only have one trade left. You
WhatsApp para otra cosa.
gain what you was gonna gain. You gain 20 pips there and then 50 pips there. So you up 70 pips total. So then once it hits TP2, right? TP2 close 50 pips, right? On 0.7. What you do on is now for TP3 to hold it, move stop loss to TP1. That way you guarantee 20 pips no matter what. That way it's a 90 pip trade no matter what happens. And that's how you make all your money. Understand, if you want to use a bigger lot size, like do not use, if your account is $1,000, do not use 1.0. It makes no sense. You're trading freaking 3.0 lots, which is $30 a pip, which you'll be good for 40 pips at max. Yeah, there's EA which are bots that does this for you. I don't use it. I do it manually. That's how I've been trading. That's how I feel comfortable trading. Right? I don't trust bots to trade for me. I ain't doing it myself. Yeah. I'm gonna go over one more thing. I'm gonna go over support and resistance with you guys, and then I'm gonna get off. I'm gonna show you guys how to look for supply and demand zone. So when you're looking for supply and demand zones, I hope you guys understood all that. When you guys looking for supply and demand zone, support resistance, first thing you're gonna do, you're gonna start off on a higher time frame, right? You're gonna start in the past. You're only going to go around where the price is at. You don't need to mark none of this down here or anything. You only got to go to where pretty much the price is around. And I go based on the past, because if you want to know what's going to happen to the right, you got to look to the left, right? You put a few of them in the day. Then I go to the 4-hour charts. I break it down more. And you can see how I place my resistance level here, matches up here and here. See, this is the daily one. So I'll change the color on that to make sure I know it's the daily one. All right, so then I go to the hour chart, and this is how I look at it sometimes, but I mostly trade on the 4-hour chart. 4-hour time frame is what I trade on, because you gotta understand, the higher the time frame you use, the less fake outs you're gonna get, the more you're able to predict a bigger move and catch more pips. Using a 15-minute time frame, you're gonna get faked out so much you're never gonna know. There's too many candlesticks, too many things going on. If you get used to trading on the 4-hour and day chart, you become a beast. Yes, for risk management, leverage does affect it. Understand that the brokers are giving you leverage on your money, right? Meaning that if your leverage is not high enough and you're using a bigger lot size, they're gonna close out your trade sooner. They're gonna try to close out your trade like right away, so you can lose your money. That's why it's very important to use risk management and make sure that you use the correct lot size. Back to support and resistance, guys, it's really simple. Anytime you see a trade go up and it hits something, so you see the trade goes up, right? That's a reversal right there. Boom. Reversal right there, like it's a reversal here, reversal there. Anytime it goes down and up, it's a reversal. So these are all reversals. That's a reversal right there. Boom, came up, down, up. Those are all reversals. Anytime a trade goes up, right? So it goes up or down and back up. That's support and resistance level right there. And you can see it for yourself. You can check. Let me check if it's a look right here. Boom, it's matching up with these two wicks down here. It doesn't always have to be right on. Like you can tell when the wicks are trying to hit a certain point. Like this wick was trying to hit 11865. Right, you go to the daily chart. 11865. We hit this resistance from the past. Like I said, if you want to know what's going to happen on the right, you have to look at the left. So look, see how it's all matches up right there. That's a huge zone, and that's why it was really hard to break through. But it should break through. See how it's coming back to this zone down here to try to then come back up and try to break through it. Because the dollar is just getting stronger because one, Donald Trump is president. Two, interest rate went up by 0.25%. There's a lot of things going on. If interest rate goes up to 1.0, woo, you're gonna see this fly up to like 130 type thing. Like it's not even gonna stay around that zone if interest rate for the U.S. goes up again. Anybody got any questions? Anybody got any questions? Anything so I can answer?
How was your Christmas, Darwin?
It was good. It was okay. I just spent the time with family. Divergence on 4 hours. I dropped my fish from 100 to 0. Am I gonna trade NFP? I'm not. I'm gonna trade an NFP, but I'm not gonna risk what I usually risk on NFP. Yes, I would trade up to 4 hour. Everybody wants my zigzag settings. My zigzag setting is 2-1-1. Any other questions, man? I hope you guys had a wonderful Christmas and you guys have a wonderful New Year's. Let's make 2017 great. Let's go casting as default. I look for 3 confirmations or more before getting into a trade. I hope you guys guys just started, money is going to be made. I'm going to do another webinar probably, if not tomorrow, Saturday. I'm going to be doing as many webinars as I can since I'm not putting out signals. I want you guys to be more educated and be more punctual when I'm actually throwing out signals, and I want you guys to know what to do. I don't want you guys making the wrong moves when I'm giving you the instructions to make the right ones. Yes, Baby Pips is a great educational site. I'm gonna get off the webinar. Let me just stop recording.